Hi, it's Jon Turino here. I am a licensed insurance agent in the state of Oregon, also in Washington, and I actually don't sell life insurance anymore. But I want to dispel a fallacy that's being promoted by a lot of people in the financial world or financial services world, the Dave Ramseys, the Sue Orbans, where they tell you that term insurance, term life insurance, is the least expensive option for you. If you need short-term coverage, 10 years, 20 years, 30 years, and that coverage doesn't have to last until it actually pays off, but has to be there because, say, your bank wants a guarantee or whatever, then it's fairly inexpensive. Let's suppose you bought a $100,000 10-year policy and you paid $40 a month for that. At the end of those 10 years, you would have paid, hang on, let me think about that. $40 a month, $480 a year, 10 years, $4,800 you would have paid. If you bought a 20-year policy, it might cost you $50 a month. So now you're looking at $6,000 over a period of 10 years, but you're buying it for 20, so it's $12,000 in premium. And if you bought a 30-year one for, say, $60 a month, you're at 6/12 is 720 times 3. Actually, yeah, 720 times 10 years is 7,200 times 3 makes it 72, 14,400, and 20-something thousand dollars. Okay, so you have bought inexpensive insurance, right? And all of that money after the term policies expire is gone. It's all cost. If, on the other hand, you bought a permanent life policy and say it cost you $100 a month to buy that policy for the same face amount, and you paid on that policy for 30 years, or actually let's say 20 years, because 20 years plus or minus 2 is kind of where the break even happens. If you buy a participating whole life policy done by a mutual company and you pay $100 a month for it, at the end of 20 years you will have paid $24,000 in premium, and your cash value account will be approximately $24,000. What that means is that your insurance for those 20 years has cost you absolutely nothing. You have more in your cash value account than you've paid in premiums. And the longer you keep that policy, the better off you are, because now, after break even, every dollar you put into it is worth more than $1, because most participating life insurance policies from mutual companies pay dividends anywhere from 2 to 3 to 5 to even 7%. So, when you hear people say that term insurance is cheaper, it only means that the cost for the premium for the term insurance while you are paying for it is less money. It is certainly not cheaper, because at the end of the term, when the policy expires, your coverage is gone and you have absolutely no cash value left. If you buy a permanent policy and you fund it properly, typically 18 to 22 years is the break-even point. After that, the cash value increases very rapidly, and you end up with a policy that has not only protected you and continues to protect you, but also provides you with cash value that you can use during the retirement years to supplement your Social Security, to do an awful lot of things that you have when you have that cash value coverage. So, let me be real clear. I am telling you the truth about term versus permanent. I've no axe to grind other than the fact that it's the truth. And I'm really tired of hearing people say the wrong things. So, if you want to talk about life insurance, find yourself a good life insurance salesperson or a financial services person and talk to them about term versus permanent. They'll tell you that term only pays off 2 or 3% of the time. That's why it's so cheap. Permanent insurance pays off 100% of the time. It's more expensive, but it also provides you with a lot of advantages that you can't get for term. Now, I'm not saying term doesn't have its place. It certainly does, especially for short-term needs and especially in a tight budget. But if you're going to buy term, buy the kind of term that's convertible to permanent insurance in increments, because later on you're going to want to be able to convert that to permanent and be able to start putting some money away in that cash value account. Okay, so that's my spiel. Don't think that term is cheaper just because the premium is less expensive.